Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Thursday, March 7th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. Start with the big picture, of course, work our way into the day itself. Just a reminder that in late December, we tested what was targeted channel resistance, then in the mid 260s, now in the low 250s. And at the time that we were testing it, we had mentioned how you should allow for 3 to 5 months bearish rotation back to channel support at 167.34. That was just an estimate in terms of timing. There was no clarity in terms of certainty that we would actually test the 167.34 formation, which we actually did about a month and a half ago. That became clear when we settled below a combination channel bottom speed line, as you recall, about 2 months ago, month and a half ago or so. If you've been watching the series now for the last few months, you know what I'm talking about. And after having tested 167.34 channel support, we'd mentioned how you should allow for bullish rotation into the low 250s over the next 2 to 3 to 5 months, with clarity on that coming with a settlement above a descending 1/3 speed line. Now, we have a new speed line, and that is because we put out a new post-July low this week. Actually, we did so on Wednesday, and that requires the creation of a new trend-defining 1/3 speed line. Prior to that, if you recall, we came very close to testing the last one that was based on the February low, and then we've fallen away over the last couple of weeks. We can take a look at the daily chart right now, and in fact, we had a sell signal below 183.92. We've reduced this to an intraday resistance level only. Now, it may well contain daily buying pressures, and below which selling pressures can continue to build. But in terms of selling the market aggressively, and I'm talking to 1 to 2 week swing traders, and even day traders, but really kind of 3 to 5 day, 1 to 2 week swing traders, I really like, and this is a subjective call on my part, but I do like this former rising 2/3 speed line that we also violated over the last few days. In fact, technically, the very same day that we closed below the 183.92 channel bottom, we also, for the first time, closed below the rising 2/3 speed line. And it is the upward retracement with present volatility. Need to give this market room to breathe up to 190 even. That is considered a sellable resistance. I also like 190 even because it's very close to the 50% upside retracement from that high about a week and a half ago to Wednesday's low. So this 190 even in reach today if we do push or open above 183.92. 183.92 until then is sellable resistance. I'm talking to day traders, especially aggressive day traders, below which we did take out the 175.01 low on Wednesday. We did not close below it. I do consider it to be a valid downside intraday pivot point. In other words, if we break 175.01, not only anticipating the 173.70 low that was put out on Wednesday, but possibly all the way down to this targeted 167.77 channel bottom. It is an objective, has been an objective. I'll take you back a little bit in time again. Following the near test of this previous descending 1/3 speed line, and then most recently a couple of days ago with the settlement below the 183.92 channel bottom. So 167.77 as a 3 to 5 week target below the low 200 area, and it's a 3 to 5 day target below 183.92. But I've reduced 183.92, and I'm thinking mostly in terms of, day traders and 3 to 5 day swing traders. In other words, if we were to close back above 183.92, I wouldn't consider that to be how should I put this, a reliable buy signal, as reliable as a settlement above 190 even would be. In other words, if we were to close back above 190 even today, and I don't see that happening, we should, by the end of next week, push into this significant 205.27 to 215.52 region. I'll be talking more about that in a minute or two. But let me continue with the downside because the emphasis does remain heavy, both below 190 even and 183.82. On the way down, we do have 175.01, able to contain intraday weakness. If we break or open today below 175.01, yes, our objective at 167.77 is in reach. And that on the weekly chart, once again, is at 167.34. Now, I need to mention this, 167.34, I use the 1% zone a lot. Now, like in this particular image, you can see how if we were to close tomorrow, Friday, the week itself, below 167.34, it would need to be by a full 1% margin or more, 165.67 or lower, to indicate a meaningful bearish continuation through the second quarter, then anticipating the 92.02 to 101.81 region within 2 to 3 months. This is the 1% line. I could also create a green 1% line above 167.34. In other words, it is the beginning of the buy zone. Some of you are familiar with this. I just wanted to reemphasize it because we're very close to it. And as it turns out, 169.01 is a minor point, and it is that 1% mark. It is 1% above 167.77. The 167.77 to 167.34 region, able to absorb selling not only for the week, but also through March and into the later second quarter, and still above which, anticipating the possibility of 250.28. And yes, and I'll say it one more time, if we close tomorrow, Friday, at 165.67 or lower, no good reason to be long Tesla if your time horizon is any time horizon, really, whether it's 3 to 5 days or 3 to 5 months, it is heavy. Then expecting the 92.02 to 101.81 region within 2 to 3 months. So liquidate those out of the money calls if you've purchased them and go short Tesla, maybe reach for out of the money puts if we do close tomorrow, Friday, 165.67 or lower. Let's talk upside again. We have 183.92, a very tradable intraday resistance level below which 175.01 is likely, and if we break 175.01, I do see the 167 handle targeted long-term support in reach today, where we can bottom out through all the second quarter. Pushing or opening today above 183.92 does signal 190 even, combined with the 50% upside retracement in the 189 handle. This area able to absorb buying into next week, through next week, and from here we can fall back into the 167.77 region within a week or two of doing so. Our 1 to 2 week swing trade levels are 167.77 support, 190 even resistance. But if we close above 190 even, we should, by the end of next week, as I say, rally on up to the 205.16 channel top. This is a new structure based in part on Wednesday's low. And there, we also have a new descending 1/3 speed line. On the weekly chart, it comes in at 215.52. We will be showing it on the daily chart as the days go by. We just want to see what the low is before we really commit to drawing it out. But it really is on the weekly chart, 205.27 to 215.52. This is our ceiling of resistance into April trade. In other words, were we to rally over the next week or two back into the 205.27 to 215.52 region, and it is narrowing weekly. As we move into mid-April, it actually all converges together to the same price. It is a significant overhead resistance area on a midterm basis. In other words, 3 to 5 weeks out to 1 to 2 months, somewhere in there, we could top out in the 205, 215 region, fall back into the 167 region, and continue doing that for a number of weeks. It would be a settlement at the end of a week above 215.52 that would then indicate possibly within 3 to 5 weeks this low 250s resistance area, which is considered in reach over the next several months, 3 to 5 months, so long as we continue holding above 167.34. So I'm going to go back to this chart here and just emphasize that were we to close today above 190 even, and that is a long shot, then I would expect 205.16 by the end of next week. That's 205.27 on the weekly chart. Daily chart is 205.16. You can see that here, pretty clear cut. The beginning of a range of longer term resistance up to 215.52 that can absorb monthly buying pressures and, if settled above, signals aggressive gains as we move into later Q2. The low 250s then anticipated inside of probably 2 months of closing above 215.52. So once again, 190 even is our pivot point as we move, through next week and into later March. I'm looking for a chart right now. There it is. 190 even is our pivot point, our 1 to 2 week time frame. We can top out here back into the upper 160s. If we close above it, expect the 205.16 to 215 region within a week or so of activity. I think that's pretty clear cut. I think that is really all that needs to be said. I'm pushing 10 minutes here. Please click like, share, subscribe. Check out wickedstocks.com. We offer 2 stock picks a week you may want to check out. Earlier in this week, it was the dollar store. Previous to that, Google, Macy's. I could go on and on and on. They're all still very relevant. And we're always looking for, 3 to 5 week out to 3 to 5 month moves. We're always looking for 20% moves on those stocks. And so have at it. Take advantage of our 5-day free trial. If you don't like what you see, you can bow out at no cost to you whatsoever. I'll be back tomorrow with Thursday's Tesla. I'm hitting 10 minutes right now. You have a great evening.